So the spring wheat really lagging here today, lagging the other two exchanges. It seems like maybe Kansas City is caught in the middle, almost in the crossfire. What's going on? Chicago quite a bit higher, Minneapolis quite a bit lower. Is Minneapolis reacting to all the rain that went through the Dakotas over the weekend, or what's that all about?
Well, I think that's certainly part of it. And when you look at the Chicago contract, I think a lot of that premium in the market this morning is on the back of the continued escalation over in the Black Sea, which, I mean, it all boils down to if you can time a headline, you'll make a pretty darn good wheat trader. But as we know, that's pretty hard to do nowadays. So I continue to expect the volatility to remain in that wheat market. I think what's really caught our eyes is the corn and soybeans market. That's what we're really focused in on. We've got corn trading to their lowest prices since July 13th. Below that is 481. So we're like kind of in the neighborhood of must-hold territory for the bull camp, a break and close below there, and there's a lot of air below the market. Now, with that said, there's a lot of bad news out in the open, right? We got good weather over the weekend. We know that demand is really poor, and we've gotten some highly reputable sources out there saying we got a 177, 178 yield out there. So if all the bad news is out there, what else can they throw at this market to break it down? I don't know what that would be. So with that in mind, I think those July lows can potentially hold near 480, but we've got to see a conviction close back above $5 to feel really good about that bias.
So the September corn, very similar chart. Let's look at the 6-month soybean chart then. So I've got September right here. Now, that's a totally different looking chart. While the corn has been dragging the bottom of the barrel for a while, on soybeans, they have really kind of come over the summit, if you will, and they're heading down. In both cases, corn and soybeans, they seem like they're getting pretty oversold, at least for this point.
Yeah, and potentially, we'll start to see low prices cure low prices. Nice to see a flash sale in corn. We've seen a string of flash sales in soybeans, which I think is supportive. But $12.90 to $13 is going to be significant for the November contract. That was the breakout point from that June acreage report. So we've back tested and filled that breakout point. Must-hold area, break and close below there, and there's really not a whole lot of technical support until 50 cents lower. So it'll be interesting to see if bulls can defend that. The funds have been defending their net long position as of late, and still in Friday's Commitment to Traders report, funds are net long about 95,000 contracts, really the only grain that they've been defending a long position in. So this is a must-hold area, break and close below there. You might start to see a rush for the exits.
Okay, sit tight. We'll come back in a moment and we'll take a look at what's going on in our cattle and hog markets. They've had some switching around going on this morning. We'll see what they're doing up to the moment in just a minute.